So good evening, everyone. Welcome to this session. My name is Yogesh, and I will be taking today's session on the basics of cryptocurrencies and blockchain. Before we start this session, I see a lot of people from different parts of the world and would like to understand. I'm sure you are given a chat option over here, and that option will be used if you will have any questions to for this particular topic. Now, before I begin this session, since I see everyone here, a big vote of thanks on behalf of Century Financial, uh, my entire team, and myself, and from my family to everyone or each one of those who are involved into healthcare sector, working in hospitals, in medical facilities, or if you have relatives, son, daughter, wife, husband, anyone who's working in hospitals and medical facilities, a big word of thanks from my end and from my family. Uh, COVID pandemic is something which is a very hard time for all of us, and we have to get through this, but we cannot deny the role which people have played, especially the people from medical facilities. So, a big word of thanks from my end. And with this, I hope that everybody is having good health around you. I hope that you are not just carrying your mask, but wearing as well and maintaining a social distance. Now, today's session is about cryptocurrencies and blockchain. There has been a lot of talk about, a lot of discussions about whether investments in cryptos, is it good, is it bad? And today we are going to discuss a few aspects of this. And please discuss if you have any questions, and I'll try to answer as we progress. Now, there are since we are doing it on the web, I want to make sure that everybody can hear me and everybody can see my presentation. So if you can hear me right now, write a okay or a yes if you can see my content. So I'll be proceeding after that, and I can see a lot of you participating in this. Please write a yes or a okay if you can see my content and if you can hear my voice properly. So just to make sure that there are no glitches. In case if you missed today's presentation or if you missed today's webinar, don't worry about it. This will be uploaded on YouTube, the recording of this, and I will be personally available for a consultation on this. So we can always have one-on-one sessions for this as well. Now, we all know one thing about cryptos is the risk part, and we are going to elaborately discuss the risk part also along with how it has been going on. But please understand, we are going to discuss a few strategies, a few investment opportunities. But since all these investments are subject to market risk, whatever portfolios or strategies or stocks I'm going to discuss or cryptos I'm going to discuss, please talk to your financial consultants and risk experts and only then decide about getting into it. So you should be fully aware and knowledgeable about what you are getting into. Whatever I'm going to tell you is again depends on the market risk, how it goes. And please make sure that you know your risk. Now, starting with the point, we have heard a lot about blockchain. We have a lot of discussion about cryptocurrencies. What has been going on throughout? So if we talk about a lot of people talking about cryptos and getting into cryptos, there are a few reasons that why this past year, and specifically if you see 2020 and 2021, there has been such an influx of cash into the crypto industry, and reasons are not we are not unaware of these reasons. These are very basic reasons. We are talking about pandemic, we're talking about recession, we're talking about this whole hype which has been created, a lot of which can be dedicated to tweets by Elon Musk as well. And then there's this whole investment climate. Let me break this down for you. So when we see the pandemic and the recession which came with pandemic, it kind of created an abnormal investment climate in the stock market, and people started looking for like alternative investment options. They started looking for, okay, if I'm not investing into stocks, what else I can invest into? So that was something we saw a different investment climate when the pandemic hit. And then if you see now there is another product which is called non-fungible tokens. NFTs have started growing interest in this whole decentralized finance. So now there is a concept of decentralized finance, which is also called a DeFi, normally, which means that now a system of blockchain is getting into use to execute the financial transactions. Now, this is something which is important because now we are going to learn about what blockchain is, because it is kind of changing and revolutionizing the whole financial industry as well, and different sectors as well. One of the largest crypto exchanges, which is Coinbase, it went public on Nasdaq in April, and their initial valuation was $85 billion. For those people who are new, who don't understand what going public means, that means Coinbase, which is a crypto exchange, it issued its shares, and now it is traded as a stock in the stock market. It is listed in Nasdaq, and the total valuation of the company is $85 billion. So this is something which kind of have started. Again, please guys, if you have any questions, keep writing on the chat. I'll try to answer these questions even while we are discussing it, or at least definitely by the end. Now, when we move to the point where blockchain comes in, so I told you that all this, the entire financial industry or food industry, a lot of such systems are being revolutionized by the use of blockchain. And blockchain is one specific reason that why people have started opening up to digital payments or investing into digital payments, and a lot of companies, a lot of institutions also, right? So this is something which we are looking at now. What a blockchain actually is, this is really important to understand what blockchain is, so you can kind of differentiate between a blockchain and cryptocurrency. Because a lot of people get confused that I'm investing into cryptos because I trust blockchain, I believe in blockchain. So now we have to understand what is blockchain. It's like a digital public ledger. So in the past, how our society has actually run is like in the form of corporations, businesses, governments, and they have been very centralized, right? Like the control of this remains in the hands of very few people. So not that it is bad, but then blockchain technology is a technology which offers a very viable structure alternative. So what blockchain does, it creates a very transparent, accountable system, and it is very decentralized. Decentralized means the power is redistributed to the smaller components of the world. Which way a system is created, which is fair, which is trustless across all the industries, and it's a breakthrough. It is definitely a breakthrough. So let me give you a few examples of the blockchain. Now, when we look at the cryptocurrencies, or when we look at what blockchain has does, now I told you that blockchain is this technology which kind of redistributes the power to the smaller components to achieve a global goal. That basically means simply that more decentralization, the power does not remains in few hands, and there is more and more transparency in all the sectors of industries. So let's take example. Look at a few brands which have actually used blockchain initiatives, and this is not now or a year ago. This is in 2019. Around 3 to 4 companies, and the ones which are not here also, I'll talk about companies like Walmart. So Walmart used blockchain to ensure the safety of their food devices. If you see Louis Vuitton, now Louis Vuitton uses blockchain to provide proof of origin and prevent counterfeit. So Louis Vuitton is, everybody knows what Louis Vuitton is. They create bags and apparels and merchandise. The brand, something which can be copied, but using blockchain, it is easily identified that which product of Louis Vuitton is original or which product is not original or a copy. Similarly, Kodak used blockchain to form a new document management system. Telegram, which is a instant messenger company, they used blockchain to extend services into payments, file storage, right? Volvo, the auto company, use blockchain to trace the cobalt utilized in electric car batteries. So this way you get to know. I'll give you one very easy example to understand. So this way you will understand that what are other uses of blockchain. Uh, Very layman, like Walmart has been testing the use of blockchain to track the distribution of food from its suppliers, making it easier to isolate outbreaks of the foodborne illness. Like, for example, if Walmart gets supplies from China, Japan, India, or America, Europe, so through using blockchain with every product, what is the component used and from which country it is. So tomorrow, if there is an outbreak in China, Walmart can easily identify all those products whose raw material comes from China and try to keep it separate, right? So this way it becomes easier for the companies, and it was not something which was very easier, but blockchain makes it easier. Talk about Starbucks, for example. Now, Starbucks also started a blockchain project for the coffee growers in Costa Rica, Colombia, Rwanda, from different parts of the world, just to make sure that the coffee which comes from all these parts, what is the cost of that coffee, what is the quality of that coffee, so that pricing can be more transparent, right? So what blockchain is doing is it is kind of helping an organization to become more efficient, because if your pricing is more transparent, then the profitability of the company is also more transparent and much higher profitability over time. Higher profitability means again revenue increases and the stock price of that company gets better. So a lot of these companies like Amazon, Salesforce, these kind of companies have actually started developing and working on the blockchain system. So that is why blockchain is something which is easier. Now, one question here is: do they have numbers to identify which is real and which is fake item for the LV? So again, how the blockchain would work is the examples which I gave you. For example, in terms of Starbucks, let me make it more transparent. So, if you are drinking a cup of coffee in Starbucks, the coffee bean which is used by Starbucks, so Starbucks can actually identify that the bean of that coffee is from which country, in which village, in which particular field that coffee bean is grown, and where it comes from, and what is the cost of it. So that is something which is very easy by using the blockchain system. Similarly, in terms of LV, it could be another way. Maybe LV has a certain amount of code through which they can identify that which of the materials used in the development of the merchandise is original and where it comes from. So you can easily track and find the transparency. So this way, so how they can identify using blockchain? Because it is a decentralized code. So let me again, so how it works is, shall we consider blockchain and cryptocurrency two separate things? Now, this is a very important question. This is something which we have to understand, that how blockchain and cryptocurrencies. So when we talk about cryptocurrencies is a product of the blockchain. So basically, every time every time a cryptocurrency is created, it's like a block. But blockchain can be used more than just creating new new currencies. And okay, let me give you one example. So we'll start with what a cryptocurrency is, and then we'll try to combine that how blockchain and cryptocurrencies are different. Now, cryptocurrency is also digital. It is decentralized, can be used to buy and sell things, depend on which company is accepting, which is not. But cryptocurrency is the result of the blockchain system. Okay. Now, blockchain, as I said, it is digital and decentralized. So these are automatic ledgers. Like, for example, how a cryptocurrency is created. Lot of computers are connected together, and they are solving complicated mathematical puzzles. And once those puzzles are solved, a hash of coin is created. And while those problems are solved, the entry into the ledger of the blockchain is also done. So somebody put it really rightly that basically blockchain is a technology which helps to track the record of data from starting to the end. So given the fact, when we are looking at blockchain and we are looking at crypto, like, you would not buy Cisco stock just because internet exists. Internet is a technology. Cisco could be an internet service provider, right? But the technology is internet. So similarly, blockchain technology is used. What blockchain is a decentralized ledger. Decentralized means the power of the blockchain does not remain in one person. It is distributed. So that way, it is much easier and much transparent. Is the blockchain used for securing the crypto? Now, securing the crypto or understanding that how crypto is secured is what we'll understand in the next few things. Let's try to understand. So, virtual money plus crypto algorithm plus decentralized network design, and we are looking at a cryptocurrency. When we talk about Bitcoin, again, it's a digital currency. So keep writing questions. I'll answer a lot of these questions by the end, and we'll have more clarity on this. Right. So now when we're looking at Bitcoin, Bitcoin is described again as a cryptocurrency, a virtual currency, or a digital currency. Bitcoin started with a very simple concept, which was created in 2008. We'll look into the timeline also of the Bitcoin and see that how it went up or down. It was a very simple thing for Bitcoin, that the transaction should happen between two people and the central bank should not be involved. That was the concept of cryptocurrencies at first. That is where it all started, right? Now, when we talk about cryptocurrencies today, it is still solving the same purpose. So if you are a person and you want to send some money to the other person, that money is in the form of cryptocurrencies, and you can transfer that cryptocurrencies. Sender or receiver, it is unknown. Nobody will be able to find out who sent the transaction. So that was the first thing what happened when we started understanding cryptos, that it was used for all the wrong purposes, which is still a very popular argument against a Bitcoin, that if we cannot track that who is sending money to who, it can be used for money laundering, can be used for buying drugs, buying illegal weapons, and there's a lot more which comes into it, right? So that is something which the Bitcoin started with. But now, over a period of time, we have seen few institutions started taking interest into it, and we saw a lot of companies started investing or buying Bitcoins and trying to understand whether there is a future or not. Let's look at slightly the history of Bitcoin, that how over a period of years it has evolved, and then we'll further discuss about how the blockchain and Bitcoin are connected, and how we can actually invest into different ways, and how we can take example of the stocks also, that which are the stocks or the ETFs which are there. There is one question which is here, that is blockchain the next version of ERP system? So it will not basically replace the ERP system, more like a complementary application. So there is a lot of security in it. It will, like, what blockchain believes is in a decentralized system where every transaction you do is transparent. And in the blockchain, nobody can manipulate the data. Nobody can alter the data. ERP has nothing to do with blockchain. It is more of a centralized process. So I answered this question because it kind of differentiates between a centralized and a decentralized process. In a blockchain, consider a digital ledger. Whichever entry is done, you cannot alter it. You cannot change it, right? So the code of manipulation or any manipulation chances could happen. It is considerably less. Right. So keep writing more and more questions, guys. I'll try to answer these questions by the end. Now, looking at the history of how the Bitcoin was created, 2008, somebody named Satoshi Nakamoto created a Bitcoin, and Bitcoin was it was a birth of people really upset about the financial crisis in 2008. So a lot of banks and institutions, they sold financial products to people which were actually junk, but due to the credit ratings, people bought it and they faced heavy losses. So a lot of anger was around 2008 in people, and they started creating. One person started creating a cryptocurrency, a currency which is encrypted, which nobody will be able to track, and central bank will not be able to track. In 2009, the very first peer-to-peer transaction happened. Two people transacted. 2010, we saw Bitcoin jumping from $0.0008 to 0.8. 2011, altcoins were introduced. We'll discuss about altcoins and we'll talk about what are the altcoins. Litecoin was introduced in 2011 after Bitcoin became popular. And then we saw in 2012, then 2013, Bitcoin went to 1164. 2014, we saw the exchange, the biggest exchange of crypto, which was Mt. Gox. It got hacked, which will be one of the risk of investing into cryptos, is that these exchanges can easily be hacked. So that was something which we saw in 2014, and we saw Bitcoin prices from $1,100 went to 760, and then in 2015 from $700 went to $300, which was a decline of 240%. 2016, we saw Bitcoin again jumping to 120%. 2017 was the time when Chicago Mercantile Exchange started introducing Bitcoin future contracts in the exchange. So it became an exchange-based product, which made Bitcoin go to $20,000. 2018, we saw again a crash after South Korea, the third largest country to promote cryptos, it banned. 2019, we saw again it reaching to $10,000. Now here comes the last 1 year, when recession happened, pandemic happened, people started looking for alternative investment options. 2020, we saw Bitcoin going up by 220% to $18,300. And then in 2021, after Elon Musk, Square Payment, MicroStrategy, a lot of institutions came forward and declared that they have positions in cryptocurrencies. It went to 40,000. Again in 2021, in April, May, Tesla said that we accept Bitcoins, which means you can buy Tesla cars and exchange Bitcoins. And for Bitcoins, and Bitcoin went to $64,000. And then later on few days, Tesla said that we cannot accept Bitcoins anymore because mining of Bitcoin is not sustainable. It's not environment friendly. And Tesla stands for more environment friendly products. That's why we saw Bitcoin crashing. And at the same time, China, which is one of the largest crypto mining area, China also banned cryptocurrencies. So we saw cryptocurrencies prices falling almost 50%. Today, as we talk cryptocurrency, Bitcoin is around 34,000, and we'll look at the live prices and how we can invest into. Right? Perfect. So I have more questions coming in. I'll answer these questions again. As I said, near to the end of the session, we'll try to answer all these questions as well. Now let's talk about Bitcoins was one. What were altcoins? So Bitcoin has been one cryptocurrency which has been very dominant since the very beginning of the industry. We saw, and therefore, if you see anybody for cryptocurrency, people always talked about Bitcoin. Looking at the popularity of Bitcoin, we saw other cryptos emerging, like altcoins, which they were said, and altcoins like Litecoin, Ethereum, Monero, Stellar, and a lot of these altcoins actually started coming in. And we saw, because Bitcoin became popular, so other altcoins also came, and a lot of people don't know. Altcoins, a lot of these altcoins are backed by some or the other asset classes or a specific activity. So something what we call as, now you look at these top 15 cryptocurrencies by market capitalization. Market capitalization means the one of the largest market values, and this is by 27th May. So Bitcoin has already reached $1 trillion. Followed by, you will see Ethereum, then you will see Tether, Binance Coin, Cardano, Ripple, Dogecoin, Polkadot. There is Chainlink, there is Bitcoin Cash, and there are a lot of alternate coins which exist. So you can buy Bitcoins, you can buy alternate coins also, and we are also going to talk about the risk. But then let's understand a bit in deep how these coins actually work. So Bitcoin was used for the transaction, right? But at the same time, the concept of stable coins also stepped in. Now, stable coin, again, a cryptocurrency that has a built-in price stability maximum. So stable coin, what is the, okay, right over your chat options, what is one of the biggest fear of trading in Bitcoin or in cryptocurrency for that matter? Actually Bitcoin, yeah. What is the biggest fear when you are investing or trading in Bitcoin? You can write your chat options. Go on, guys. Start. Okay, I see a lot of people answering. Sudden crash, fluctuations, high volatility, losing value. This is important, very important. Perfect, great. Volatile market is the biggest, absolutely. Losing value, volatility. So a lot of you are answering the same question: volatility, fluctuations, right? Price variations, sudden crash. Now, what if cryptocurrencies would have some sort of stability? Now, that's where the stable coins were introduced. And stable coins are actually, so if you will see, there are different types of stable coins, and the word stability itself means that these coins, most of them, are backed by either a fiat currency. Fiat currency is what? Fiat currency means dollar, pound, euro, yen. These are fiat currency. So a lot of stable coins are backed by fiat currency. Some of the stable coins are backed by commodities like gas, like gold. Then there are some coins which are backed by cryptos. Now, when I say the word backed, please understand this. Please have a notepad with you. If you have a notepad, I have one with me. I write it down normally when I speak, but just note these things down. It will help you to understand. In case if you have any like whatever I'm saying, just try to note it down. And again, we can have a one-on-one discussion also. Now, when we talk about stable coins, a lot of these coins, how it works is when I say fiat-backed stable coins, so there is a stable coin called Tether, Tether. Tether coin is one coin which is pegged with dollar, and these days that is something which is kind of very in right now. How a stable coin would work and how a stable coin would even start. So when we say for example we talk about Tether, right? Tether can be used to reduce the risk of the adverse price movement. Consider a country with high inflation. Consider Venezuela, for example. Now, Venezuela, if I tell you, do you know Venezuela has almost their national currency has been devalued by over 95%. 95%. Which means if one cup of coffee was $1 today, it could be $20 tomorrow, or could be $20 in the next few hours. That is something which inflation or hyperinflation does to the economy. Now, why a currency moves so much? Because political uncertainties are there, economic uncertainties are there. There's a lot of chaos, high inflation rates happen, right? Now, what these stable coins do, what they are doing is the stable coins are created by these third parties and they are pegged against the value of the fiat currency. Let's say dollar. So what they will do is they accept payments from people and they convert the money into stable coins, right? And stable coins can be used to preserve the money. So basically what happens is, I'll give you one example. Let's say you bought a Bitcoin. Okay, write this example down, guys. I know this could be a new concept to you, so it will be easy if you can write things down, and we'll try to again slowly and gradually grab these concepts. Now, sorry. So when I talk about stable coins, I'll give you one example. Let's say you bought Bitcoins. Okay. Uh, Now, when you bought Bitcoin, your biggest fear of Bitcoin is it might fluctuate a lot on the news of different things, right? How about if you can reduce the risk of investing into Bitcoins after you have invested? How it will work is, let's say most of the crypto traders, they will sell their cryptocurrencies and they will buy stable coins with it. Like, for example, if you have $10,000 worth Bitcoins, okay, and let's say you have a stable coin means a fiat backed, like Tether, for example. Now, Tether is one stable coin which can be converted against the Bitcoin in the crypto exchange. So if you have $10,000 worth Bitcoins and you think that there can be a lot of volatility, you can actually exchange Tether and or sell Bitcoins and buy Tether with it. $10,000 worth Tether. Now, because Tether is directly pegged with dollar, whatever dollar value goes up or down, Tether will move accordingly. But it will not fluctuate with the Bitcoin fluctuation, right? So that is how you can actually hedge your risk using a stable coin. So what will happen is, normally what would you do? Answer my question. If you have bought $10,000 worth Bitcoins, okay, and you are expecting that Bitcoin will go up and down and you're not sure what to do. So your first instinct is close your trade and take money out and sit on cash, right? Doing that, what will happen? You have to first book your trade, you put a cost over it, then you withdraw the money, it reaches to your bank. If you want to buy Bitcoin again you transfer money from your bank to that crypto exchange and again you do it. But if you have a stable coin like Tether, all you have to do is, instead of getting a Bitcoin, exactly, you convert the Bitcoin to Tether and keep Tether with you. That is your cash which is kept here, just cash, because Tether is directly pegged to the dollar. So like this, there are a lot of stable coins which are connected to pound and euro, which are connected to an asset like gold also. So there is DGX. Now DGX is a cryptocurrency which is backed by gold. You can buy gold from the vendor, and that gold, so whatever money you give for the gold, that gold is converted into a smart contract, tokens are issued with it, and you can hold that stable coin along with it, which is something which can be easily done. So we are looking at a lot of such stable coins coming in, and we'll discuss about a lot of. So there's a question about what regulates the stable coin, right? Now, because stable coins are also a subset of these digital assets, blockchain enabled, they are pegging their value to another asset like US dollars or something like that. So if you understand about whether it is regulated or not, there have been a lot of US lawmakers that have proposed a very strict regulation under the stable coin, basically. But again, it would require a FDIC insurance or Federal Reserve deposits to back up stable coin. So that is again something which is there. They are considered as a single fiat because they are pegged to a fiat currency. There is no expectation of the profit, but they are still not a security. They are still not what you say, a financial product, because you cannot earn a profit or loss. It is more of a pegged instrument, right? So if you see Tether, for example, the question was whether it is regulated or not. So a lot of well-known stable coins like Tether is there, Binance is there, Truecoin is there. All of these stable coins are just pegged to US dollar on a one-on-one ratio. So that is it. If you talk about whether it can lose value or not, if the asset backed by it holds the value, especially the dollar, then it is more stable, right? So that is something, again, it has that kind of third party risk, because if your vendor is not there, or if your vendor is not properly audited, then yes, there is a problem. But a lot of such vendors, they are audited on regular basis. Right. So again, we are looking at a lot of crypto. I'm still trying to answer a few questions here. Stable coins are also virtual coins. That is correct, but they are backed by an asset. Yes. Um, okay. Usually, who transacts with stable coins? Who monitor these transactions and what platforms? So see, stable coins like Tether also, there are crypto exchanges who provide you. But let me tell you again this, why I'm bringing stable coins into this, because you should know each and everything about blockchain, cryptos, and digital coins, so you're more aware about it. Stable coins are mostly used by people to sit on cash. So I give you one example. If you're holding a Bitcoin position and you're expecting a heavy movement in the Bitcoin on the downside, rather than closing your trade and taking your money out in the bank and keeping it, you just convert it into a stable coin, which is pegged with the US dollar. So basically, you just risk your hedge. So stable coin is only used to hedge your risk, and that is it. A lot of people would use again those people who would again, not something which we can discuss about AML and stuff, but stable coins are mostly used by the Bitcoin investors to hedge the risk. Let's keep it till there. It is good to convert Bitcoin to dollar. However, kindly let us know if there is no conversion fee from Bitcoin to USDT, or the exchanges normally charges this every time we switch between a Bitcoin to. So definitely depends on a exchange to exchange. Normally, a lot of crypto exchanges, they have a buying and a selling spread also. So that is again exchange to exchange difference. Charges may not be much, but the spread is something. The difference between the buying and selling is what you have to actually check. Okay, US regulation is limited to only within US boundary, right? So yeah, I mean, at least the currencies which are pegged by US dollar, correct. Is it really backed by USD? Now that's a great question. That is Tether actually backed by USD? Tether is backed by USD, but over in last few months there has been a popular concept of that it is more than that. But then again, there are a lot of conspiracy theories around it. With the concept we are talking about, yes, it is backed by dollar. Question: what if I buy cryptos in some exchange and all of a sudden that exchange closes or not reachable? Oh yeah, that's a major risk. So we'll talk about the risk again. If you stick with me and if you survive till the end of this session, we'll definitely talk about the risk and something what you are normally talking about. So this is something which is really important. We'll definitely talk about the risk part. So please stay with me, and I'll answer a lot more questions which have been asked before also. Just one second. Let me see a few more questions also. Yeah. Now, so this is the concept of stablecoin. This is something which is something new because there are a lot of coins like Maker, Tether, DJX, which are stable coins which mostly serve purpose, and they are backed by a specific asset, and you can always use them for hedging your investments in Bitcoin. Now, this is what you see right now is last 4 quarters of last 2 years, from Q1 2018 to Q4 2020, before the beginning of 2021, that how the trading volume in Coinbase, which is one of the largest crypto exchanges, the trading volume of the cryptos increased. Especially in the last quarter of 2020, we saw the volume going to $89 billion, out of which institutional investors, which means companies who were trading or investing in cryptos, were $57 billion worth. This is really important. So it has actually increased from 2018 Q1. By the end of 2020, the volumes of institutions entering into was 5 times higher. So guys, there's a question that what was the difference? Like in 2017, cryptos fell. In 2020, 2021, we saw cryptos fell. What is the guarantee it will go higher or not? So obviously there's no guarantee or assurance. But let's see 2017 and 2020. 2017, when the Bitcoin went up, it was individual retail investors, because it started getting listed as a futures contract. Retail investors also started putting in. There were a few institutions, but that rallied the prices higher. But specifically in 2020, companies like Square, companies like PayPal, companies like Tesla, companies like MicroStrategy, a lot of such companies started showing interest, and they did a massive buying of crypto positions, which actually increased the institutional investment in cryptos, and we have seen it going higher. Right? So this is where we can see that the institutional volumes right now are at one of its peak, and that is the reason that why whenever the crypto prices come down in a day, we'll go to a live platform also, guys, and we'll see the live pricing of how the cryptos are moving, and I'll show you a few different ways to invest into cryptos. So just stay with me. Now 2021, the year of the cryptos, we saw something like Dogecoin going up by 7,555%. Now, this is again something, guys, which you have to understand, which we'll talk about in the risk factor, that not every coin which is a lot talked about or has a maximum PR is a great coin. Okay. When we talk about Dogecoin, there are a lot of such coins, like there are a lot of coins which are better than Dogecoin. And like we'll talk about Cardano, and I'll discuss more detail about Cardano also. This has got a lot of attention. But something like Dogecoin, when we see it, it started with a joke, and it went on, and started reaching to a point where it went, as you see, 7,500% increase. But the supply of Dogecoin is not that difficult to attain. Every year, the supply of Dogecoin, it keeps increasing. So basically, the value of cryptos go higher because the supply is less. It's difficult to mine and it's limited. But something like Dogecoin, whose supply is not that limited, it can actually it cannot be a very good idea to look into, because the prices will not be of a very higher value if the supply continues to match. Okay, now this is one important question here, so I'll just address also this one also. All the questions are really important, but I'm just going with the flow. What is the basis of valuation of crypto? Who determines them? So valuation of cryptos happens how? Number of coins, the total number of coins multiplied by what is the current price. So basically, if there is 10 million coins and the current Bitcoin price is $30,000, 30,000 multiplied by 10,000 coins will be the total valuation of that particular crypto. So like this, the entire cryptocurrencies, their supply, number of coins they have multiplied by the price which it is. Who determines them? Now that's the point. Because of the blockchain, there is no one single person who is holding the command. Sorry, somebody just said my session is breaking. Just to make sure that everybody can hear me, can you just send me a yes or a okay? If you can hear me, just send me a yes or a okay. I just want to make sure that it doesn't break. Okay, perfect, perfect. You can try to remove the hands-free in case your headphones, in case if there's a problem in the voice. Sometimes it happens. Yeah, thank you, thank you. Okay, so who determines them? Because blockchain in itself, it's a so this is a so that's where we try to understand. Let's try to understand the difference between Bitcoin and blockchain. So that was the first question which we started with, that what it is, and now we are reaching to a point where we have to understand that who determines it. Now, Bitcoin is a cryptocurrency, but then blockchain is like a distributed database. Bitcoin is powered by blockchain technology, but then blockchain extended further and it found so many uses which was beyond Bitcoin, right? The problem is where Bitcoin and blockchain purpose is completely going different is Bitcoin promotes anonymity. Like if today I transfer money to XYZ, nobody should know about it. But blockchain is about transparency. Okay, so this is something which is important. And Bitcoin is also a block, it's a kind of blockchain, but it's in its more simplest form, like a database, and it is automatically updated. Basically it is updated automatically. The transactions which happen, they automatically get updated into the ledger through a decentralized way. And this particular database is distributed. It is peer-to-peer network. There is not one single person. So it's peer-to-peer. It goes on much lower levels, right? So again, this is something which we have to understand, that most of the cryptocurrencies, they are using blockchain technology to record transactions. And whether you talk about Bitcoin, Ethereum, they are both based on blockchain. Now, the question should be, can blockchain exist without Bitcoin? Because blockchain technology is not very exclusive to the crypto world. Like some of its very exciting applications, it has nothing to do with Bitcoin or any other crypto. Like a very simple explanation of blockchain is a digital record which is split into pieces which are called blocks. So that is something which a blockchain does. And that was the reason why I was telling you that you don't buy Cisco stock just because internet as a technology exists. Okay. Looking into few more questions. So again, who controls the yeah. Yeah, I will try to give more clarity on mining. So what we'll do today is, first of all, also we'll try to understand investment options, which is the center point of this particular session, and we'll try to talk about the mining also. Mining again is a very elaborate subject, so we can have more and more sessions about it. But again, that is something which we'll try to talk about it. Now, there is one specific question here: can blockchain be used for mining the Bitcoin? So again, it's a mining question, but then again, when we see there are the mining somewhere involves blockchain miners, they add Bitcoin transaction data to the public ledger. So yes, it happens. Blocks are secured by the blockchain miners. They are connected to each, forming a chain, right? Okay. Yeah. So I'll continue to answer more and more questions. There are a lot of questions. Let me just continue with this, and please do not leave until your question is not answered, because by the end I'll scroll it down and I'll see a lot of more questions which are related to the wallets also. And while we are going with this presentation, we'll see. Now here's an interesting chart. What you can see right now is the performance of major cryptocurrencies since Bitcoin hit all-time high. This is fresh since April 14, not going at the past. Anybody who sees Bitcoin price chart in the past, it is like this, which is very difficult to understand what it is, right? Like this. So you don't really know what to make out of this. But this is right now the major cryptos, what we have seen, their all-time, since Bitcoin hit its all-time high. After that, what happened? So we see Cardano going down, we see Ethereum, Chainlink, Litecoin, even Bitcoin as good as minus 40, minus 50% after it's reached to all-time high. Ripple also, if you see, minus 60% after Bitcoin reaches all-time high. So off lately, we have seen, it does not include Dogecoin, because Dogecoin is up by 115% still net. Bitcoin Cash is up, it's down by 23%. But this was one of the most important reasons that why cryptos became a much more talked instrument, because it hit 50%, 60% down. So a lot of people started entering, and we'll see the live chart of Bitcoin also, what happened when it crashed and how it went up. Now, if you see it here, this is a very important data, guys. So look at the second chart. Crypto trading at a dip from its recent high. So if you see Bitcoin, 2021 high was $64,870. Current market price when this was prepared a few days ago, it was around $39,000. Decline from the recent high, 39%. Similarly, Ethereum, Bitcoin Cash, Cardano, 50, 20%, 57% down, 58% down, like this. Now on the left, if you see the first chart, it shows major correction from all-time high over the past 5 years. So if you see in at the bottom, 10th March 2017 to 24th March, in 14 days, Bitcoin high was $1,326, lowest was $892. So it went down 33%, and then when it reached to a new high, 495% the next month. Again, there was a decline of 39%, and the new high was 65%. Decline of 40%, new high 70%. Decline of 30%, new high 43%. Decline in 2017 was 84%, and the return to the new high around 530%. Then in 2021, 31% decline, 45% new high, and now 54% decline. And we don't know what will be the new high date. But looking at the past, whenever there has been a historical decline, again, guys, click a picture of this or take a screenshot if you can see. This will be there in a form of a flyer. You can talk to your relationship managers and they will send a copy of this. So right now, with the decline of 54%, we have seen in the past from 2017 that every time a decline happens, the new return all-time high is much higher than that. So that is again one of one of the significant impact why people are looking towards it is for this particular reason. Okay. Yeah. Okay. Keep writing more and more questions, guys. We'll address this. Okay. Now coming the last segment of this, which is investing into the crypto market, investing and the risk involved in it. Now, just like the share market, crypto is very highly volatile, and we really have to be careful about what we are investing into. If you want to buy, sell Bitcoin, if this is your child's education fund, or if this is the money which you need in the next 2 months for sure, then crypto trading and speculation is not the right way to do it. Okay, this is something which you have to understand. And I'm just getting a repeated question about who controls the number of cryptos or who is controlling the supply. So, guys, as I said, the supply of Bitcoins or the control of the cryptos, everything, I'm going to answer this question much in detail. But again, as I said, these kind of cryptocurrencies, it runs on a distributed ledger, right? So a lot of people, they are solving mathematical puzzles. Every transaction which happens through a Bitcoin, okay, becomes a problem. And when the problem is solved, that entry is done. So that is something which we have to be careful. I'll give you a more specific answer to it. Let me just discuss about the investment in the cryptocurrency market. Now, somebody asked me about e-wallets. Which exchange do you recommend in UAE and have wallet facility? Can you explain what is wallet, as I heard about relating to Bitcoin and other coins? Understand the concept of a wallet. E-wallet means, now there are different ways. So I'll discuss about the e-wallet first. There are crypto exchanges like Coinbase, Binance, right? A lot other names. Again, we do not support or promote any of those crypto exchanges. I'm just taking bigger names. Maybe you must have heard about these companies because these are few largest crypto exchanges. Coinbase is there, Binance is there, and there are a lot of this. Now, that is one way to trade or invest in cryptos, that you make your trading, you make your e-wallet account. And there are a lot of companies, most of the time the companies like Coinbase and Kraken, they give you wallets also. What is an e-wallet? It is where you store your cryptocurrency, online, digital, because it's a digital asset. So you cannot keep it in your pocket or in a wallet. So you create an e-wallet. What happens is, from exchange, you buy the cryptocurrency, and that cryptocurrency can remain in your e-wallet. Anytime you want to do another transaction, you go to your e-wallet, take the currency out, directly goes to the exchange, and the transaction happens. So basically, you store your cryptocurrency in an electronic wallet, and there are a lot of companies which provide such kind of e-wallets also. Okay, so that is something which is again an important concept. This is the traditional way of how people have been transacting in cryptos. Yeah. Now comes the next question. What if it is hacked? Absolutely. The moment I said e-wallet, so if you see the next slide, which I'm going to talk about, will be risk. So that will be the most prominent risk fact which will be talk about. Hacking is also something. So first, I'm discussing about the investment options, and then I'll be talking about what happens when. So how do you protect yourself from the hack, or what is the idea? Because that is something which is really important for us to understand, right? Second way is derivatives. What are derivatives? Now, derivatives means that you don't get wallet, completely different from e-wallets. Okay, you don't need a wallet. You need like trading accounts. So there are a lot of companies which provide trading platforms, and they create these replicas of cryptos which derive the value from the actual exchange. So today, let's say, so let me show you one of these derivatives exchange. Sorry, not derivatives exchange. Yeah, a platform which can provide you a derivatives wallet. Just give me a second. Right here. Right now, you're looking at a platform which doesn't need an e-wallet. This kind of investment style is different. This is called derivatives trading. Now, what derivatives trading do? You click on cryptos. You will see there are these cryptos and their prices are moving. Okay. I have put $200,000 in my investment account. If I am looking at Bitcoin, I click here. I take Bitcoin. This is one Bitcoin, $36,500. I write one Bitcoin, press enter. It shows $36,000. And these derivatives, they use margin facilities, which means even to buy one Bitcoin, whatever is its total value, you don't have to give your total value. all you have to do is block a percentage of your total equity and click on buy, and you bought one Bitcoin right now at 36,615. Close this, go to your account, check your positions. You will see that you have bought one Bitcoin at this price, and right now your total floating loss is $260, $270, depending on what the sell price is. So it will continue to fluctuate in the similar manner. This is a trading account. This is a derivative based account. Okay. Let's discuss about the risk also in the next. So I'll take each one of these individual asset and we'll talk about the part where we'll talk about the risk also. So this is one way you can invest into cryptos by using a derivative based platform which shows you the buying and the selling price. Now, coming back, stocks. Now, every time when internet came, along with internet, a lot of businesses happened. Video streaming, live streaming, everything with the use of internet, right? So Netflix is also a product of internet. Amazon is also a product of internet. Cisco is also a product of internet, but they do different things. Similarly, when cryptos or blockchain is there, blockchain does a lot of things. It just does not do cryptos. So there are a lot of companies like PayPal, and I'll share the portfolio with you before the end of this session, which will show companies like PayPal, companies like Tesla, companies like Square Payment, who have shown a lot of interest in cryptocurrencies. And there are next ETFs and indices also, which gives you a diversified exposure. And I'm going to discuss all of this in a portfolio right here. So we were talking about the risk. Let's look at the questions for the risk. We'll understand the derivatives also. Now, first, the volatility. This is the most. So I'm telling you risk combined, crypto exchanges, derivatives, stocks, ETFs, everything. First and most important risk, guys, write this down and don't miss the last 10 minutes or 15 minutes of this session. This is where I'm going to discuss the portfolio and show you a live account also, that the trade which you have taken in the crypto. Now, a lot of volatility happens here. Price changes happens a lot. So volatility is the biggest risk. If you buy Bitcoin today, tomorrow it can be something else. There's a very popular joke that a son asked his father on his birthday that I want one Bitcoin. And the father replied, one Bitcoin? That means $15,500. Why do you need $14,000? What will you do with $16,000? Bitcoin is that volatile. It changes every second, right? Now, volatility is one thing which is your risk. So you have to be very careful. It's an extremely, extremely volatile instrument. Second is unregulated. A lot of people asked about who's regulating cryptocurrencies. There is no regulation of cryptocurrencies. They're not regulated. A lot of people keep talking about whether they should be classified as commodities or as virtual currencies, but there is no specific body which is regulating crypto market or cryptocurrencies. So that is the reason that why this thing is still not in use. Otherwise, every now and then people would be accepting cryptos. What makes dirham the acceptable mode of exchange? You accept, I accept, and there is a central bank which regulates it, right? That is why dirham is accepted. So there is no regulation. So that's the biggest fear. If it doesn't get regulated, then there may not be. Cryptocurrency doesn't have an intrinsic value. Like Bitcoin doesn't have an intrinsic value. It can go to zero. So that's where you have to understand. Hackable. So somebody asked about, can e-wallets be hack proof? It cannot be hack proof. You can always make your security measures stronger. But in 2014, Mt. Gox was hacked. That is also one reason that why you need to be very careful. On a completely different topic, friends, I did one webinar on investment in cybersecurity stocks and cybersecurity baskets. So this is the one important reason that why you should diversify your portfolio and invest into cybersecurity companies also. Because cryptos are becoming popular. There is a question that if cryptos are not regulated, why it is so popular? So it is so popular because why people like Justin Bieber? Not everybody likes Justin Bieber, but the fan base of Justin Bieber are called believers. So similarly, in cryptos, there are believers who feel that this is the currency of the future. And after why it became so popular, after Elon Musk, the world's richest man, tweeted that Tesla will be accepting Bitcoins. PayPal will be accepting Bitcoins. That was the reason that why at the first place crypto started going higher. Chicago Mercantile Exchange listed it as a future contract. That was the first thing why crypto started going higher. So they become popular because of a lot of news and information around it. And second thing is pandemic, recession, noise. A lot of things are behind the popularity of cryptocurrencies. You have seen the meme stocks, AMC, GameStop. Why they went so higher? Because they made it popular. So yes, that is one of the risks that you have to understand. So that's why I'm telling you that if you're not interested in buying a Bitcoin or a cryptocurrency, you can look into blockchain as a technology. As I said at the first, that you don't buy a Cisco stock because internet exists. Blockchain is a technology which is used by Amazon, which is used by Walmart, which is used by Facebook, which is used by a lot of companies. So you can start investing into those companies which are using blockchain, those ETFs which are using blockchain, right? And I'll share the portfolio right away with you. Liquidity issues. So there was a question that if I invest into crypto exchange and exchange closes down or suspends the trading, then what happens? Exactly. So this is a liquidity risk. It can happen. If you remember, Binance stopped giving withdrawals for 48 hours, and there is nothing you can do about it. So yes, there is a risk. So that is why when you talk about cryptos, these are the risks which comes into point. So there is no fundamental base. It drives on speculations, right? Cryptocurrencies at this point of time, very speculative mode, very speculative mode. If you're buying Bitcoins and keeping for a long period of time, there has to be a certain amount of risk which will come across. So a lot of people are using it as a speculative medium. Trading in cryptocurrencies is actually increasing. So I'll share, this is a very good question. That is it speculative or there is a fundamental base? So I'll talk about Cardano after this slide and I'll tell you what is going on. There can be price gaps in cryptos. A lot of times the trading and exchange happens on weekends and this is a risk in derivatives, that Saturday, Sunday, the derivatives, they do not provide you the trading. So Saturday, Sunday on main exchange, the cryptos trade. So on Monday, there's a possibility that the market opens at a lower gap and your stop losses get the lowest of the point. Then there is a cost impact. I told you that there is, when you are investing into Bitcoins or any cryptocurrencies, there's a buying and selling spread, and sometimes there's a holding cost. So the cost impact can be higher. That's why you have to check your proper broker and platform provider that the cost should be maintained, right? This is the recent news right now. So somebody said about why, if it is not regulated, why it is so popular and what is the future of this, right? El Salvador has actually become first country to adopt Bitcoin as a legal tender after passing the law. I have put deliberately the date today because this is 8th of June, 11:45 p.m. When I finally updated the presentation. So it has become the first country to adopt Bitcoin as a legal tender, and lawmakers in the Central American countries Congress voted by a super majority in favor of the Bitcoin law. So that is the start. And that is something which could push so what pushes cryptocurrency prices up? Something like this a lot of times, right? Now, let me share with you something about the investments which we have prepared over here. And this is something which can really help it out. Right here. 1 second. Okay. Now, this is for all those people who have definitely understood. Obviously, a lot of you have understood my presentation and understood one thing, that only taking a naked trade in cryptos, buying and keeping it, may not be a good for your portfolio, right? Now, this is where we try to understand. I'm sharing this portfolio with you. It's taking time in my system. I hope everybody can hear me properly. My browser is taking a bit time, and I'll just 1 second. So meanwhile, the portfolio appears on the screen and it shares. I'll talk about which are the instruments which are included in it. So you can actually create your own basket, and where you can focus on few companies which are working on the blockchain, and few companies which are accepting Bitcoin as a mode of payment. And these companies, like, again, I'm talking about the digital payment companies. Just one second, let me see if it is working. Just one second, guys. Sorry. I'm so sorry. I think my browser is just stuck trying to share this portfolio with you. I'm so sorry, guys. I lost the connection. I don't know. Can you, if you can still hear me? If you can still, guys, if you can still hear me, I'm so sorry. I got logged out completely. My browser got frozen. If you can hear me, send me a yes or a okay. Okay, okay. I hope people are still there. Okay, great, great. Thank you so much. Yeah, thank you so much. Yeah, I was sharing this platform here. It's just so much congestion. These a lot of webinars are happening right here. Okay, now this is what I'm sharing with you. Just look at this. Now, again, this is something which we created for all those investors who said, okay, I'm just not going to buy a Bitcoin and hold on to it, because this can be anything, right? It is something which is we are not looking at it. Now, look at this. If you want, you can actually diversify yourself here. Now, this is where you can start separating, only investing into Bitcoin or Ethereum or Litecoin or Cardano, and start looking into the company's part also. Invest, if you want to invest $100,000, could be 10,000 into all these 4 or 5 cryptos, and then remaining money you can diversify into PayPal, Square, Tesla, and then something like Riot blockchain or Marathon Digital Holdings, right? What does these companies do? So if you scroll down, you will see Marathon Digital Holdings. It's an IT company, one of the first Bitcoin mining companies to be listed on the exchange. And this company holds around 5,100 Bitcoins. It includes ones earned as a result of mining operations. Similarly, if you see the company before this, Riot Blockchain, again, focuses on the mining. The stock is more volatile, closely correlated with the movement in Bitcoin prices. So, not directly following the Bitcoin, but following the prices. Now, again, I talked about blockchain investing also, right? Which are the funds which you can look into blockchain investing? So, blockchain investing, if you see these four: Amplify Transformational Data Sharing ETF, Reality Shares, Grayscale Scale Bitcoin, Grayscale Scale Ethereum Trust. The first two funds, these are focusing on those companies that are engaged into design and development or transformation data sharing technologies, including blockchain as well as crypto miners. Again, MicroStrategy is one company which is the part of this fund. Hive Blockchain, Canon Inc. Like a lot of blockchain-based companies are a part of this fund. Second is, again, the second fund is focusing on those companies that are dedicated to blockchain technology and crypto development. So Canon, Galaxy, Square, Baidu, all these companies are a part of it. Last two are very crypto specific. It tracks the performance of the Bitcoin index, the third one, and the fourth one, it tracks the performance of Ethereum index. Again, the index, not the direct currency. So this is something which you can take an exposure into the form. Again, blockchain funds, right? So one question from end, who controls the financial trading platforms? The financial trading platforms, it's a good question to ask because again, it's a risk-based question. The financial trading platforms are controlled over by these specific providers. So for example, mine is CMC Markets platform. So CMC is controlling the platform. So one of the risks is, again, as I said, the trading suspended or the liquidity which is not available. These are the liquidity providers risk, or these are the CFD providers risk. It happens. In 2017, a lot of CFD providers, when the Bitcoin prices started moving higher, the trading was suspended. Could confirm what is non-fungible token. I'll very quickly explain it to you how it works. Non-fungible token are created using Ethereums, okay? And non-fungible tokens, the example is today, if I have 100 dirhams, I have to pay you 100 dirhams. I can pay you 10 bills of 10 dirhams also, right? This makes it a fungible token. A non-fungible token is something which is rare, which cannot be replicated, which cannot be divided, like a piece of art. Mona Lisa, for example, it's a non-fungible token. Now, the concept of non-fungible token is very simple. Whether it's a video, a meme, a GIF, a art, you can actually create it, put it on an NFT marketplace using Ethereum, and people can actually buy and sell that piece of art using Ethereum. It can be a meme. So one of our chief market analysts, Mr. Vijay, in 2017, he was talking, or 2018, he was talking to a radio station, and he talked about Dogecoin for the first time. Now, if I want, I can pull that recording out and make it a rare piece of information that Dogecoin went up this year by 7,000%, but we had a guy who talked about it 2 years ago in a radio station. And there will be people who want to have ownership of that recording because that's one of the rares. Similarly, that's what NFT is. Now, your question would be, why would I buy? Why would I own it? I can just hear it on the radio. So why would you buy a Mona Lisa? Just to have it. You can still Google search Mona Lisa and you can see Mona Lisa, right? That is what the NFT market has become. It is still a very explorable concept. It's not 100% safe. Again, a lot of stuff on NFT of lately, 3-4 days ago, NFT markets crashed. So we are trying to learn more, but there are a lot of such companies which are connected to NFT. Guys, one of the best part about investing into blockchains or this is, don't try to do it directly using a crypto. Try to find out those companies which are having indirect exposure in it. So tomorrow, if it becomes a success, the company goes up. But even if it doesn't become a success, talk about semiconductors. Now, let me give you one specific guide before you guys leave. Try to understand this. I was going through a few of the articles, and we were doing a lot of research. And we're talking about which are few companies which can give you. So talk about NVIDIA, talk about PayPal, talk about MasterCard or JP Morgan, right? These are the kind of companies, again, which are few of them which will be benefited. They are taking exposures in blockchain-based or cryptocurrencies. There are a lot of companies also which have actually went higher just by taking exposure in cryptocurrencies. So many stocks. Imagine companies which are related to semiconductors, right? Now, semiconductor-based companies like NVIDIA, Bitcoin mining needs power. They need graphic chips, strong graphic chips, which is prepared using semiconductors. Now, semiconductors increase the efficiency of mining Bitcoin. So you can start investing into semiconductor-based companies, not directly into the crypto chain. Again, this question is that what exactly is mining? Something to do with physical work? If yes, how? I'll give you a very basic explanation to it. Crypto mining happens by connecting the lot of computers placed in a network, and automatically they are solving mathematical puzzles. A puzzle is solved, a part of a coin is mined. So mining is not that physical mining, but why they say mining? Because Bitcoin is created using hundreds of computers, a lot of electricity and energy and efficiency of the graphic chips. That's how the crypto is created. That's what mining is all about. So there are a lot of crypto mining companies, as you said, Riot Blockchain and other companies, which are doing a lot of mining also. So you can always look into these mining companies, and with the experts around you, financial consultants around you, you can talk to them that which are these companies, because there are a lot of companies. I have a very small and humble request. A lot of you have typed questions in the beginning. My browser got frozen, it got closed, and I had to reload it. So a lot of questions which were in the beginning specifically, I've answered a lot of questions, but there were few questions at the beginning. If you all are still there, you can please write all those questions. Who's creating mathematical problems? So these are again with the blockchain distribution. These problems are created automatically. So every time a journal entry, I'll tell you how it works. If you transferred blockchain to me, if you transferred Bitcoin to me, that entry in the ledger appears on somebody's computer as a mathematical problem. And when that mathematical problem is solved, it is recorded as an entry of the transaction in the ledger. So it is again happening automatically. Will the cryptocurrency be accepted in the future or be legal? And if this becomes regulated, will it be decentralized, and how it is going to impact the price? So a good question. Will it be accepted in the future? That's the question. Now, there are few of them who believe in it, that it will be, especially now with the El Salvador actually accepting. Is this a start of the future countries to do it? Because Venezuela tried coming up with the cryptocurrency to control the hyperinflation. It didn't work. But now, because a lot of institutional interest is there, a lot of corporates are entering into it, there could be a possibility that in the future, it might become legal, but it may not be accepted in the same form it is. Because let me clarify the difference. Bitcoin promotes anonymity and blockchain promotes transparency. So now they're becoming completely separate. Maybe if Bitcoin becomes legal, it will be in a different form, may not be in its original form, but yes, it's a possibility. Again, risk included, there can be. Suggestions for long-term investment. Now, long-term investment, a part of your portfolio should always look forward to your basic, your old school investments, those companies which are giving you good dividends. Okay, so that is there. That should not be changed. Your Exxons, your Coca-Colas, and long-term stocks. Then a part of your portfolio, again, can be invested into growth stocks, innovation, biotechnology. So innovation, biotechnology are smaller companies which can become bigger in the future. Okay, I have one of portfolios for that as well. But then few growth stocks like the Amazons, like the Teslas, PayPal's, and then Toyotas, and these kind of companies which are in this growing phase and can become higher, Alibaba for that matter. So your stocks are also divided into three parts. Then comes investment like this, which can be done in the form of ETFs or funds. I would never promote buying a Bitcoin, holding it for 10 years, unless you are ready to take that risk, you can. But normally, a lot of people would invest into NVIDIA, which is which is responsible for providing graphic chips to increase the efficiency of the computers which are used for Bitcoin mining, right? A lot of people are investing into Amazon for a longer period of time, because Amazon is investing into blockchain and cloud. And blockchain and AI based sectors are again booming, expected to boom in the future. So long term should be that. Would never look into a cryptocurrency and say, okay, let's buy it for 10 years, because you invest long term into a cryptocurrency if you're ready to lose that money. That's the ground base. More question. Invested in student coin which drastically down. What's the future of it? So this is again brings me to a point. Of lately, there was a news in Khaleej Times that around $80 billion or $80 million around. I think the exact amount was 80 million dirhams. 80 million dirhams in crypto scams was lost in the very first half of the year. Please be very careful from the fraudulent. Just because a company has a financial regulation license doesn't mean it is authorized for a crypto exchange. So do not just give away your money to any crypto exchange. I think it was a question somewhere that somebody asked, which is the best crypto exchange in UAE. There's no best crypto exchange in UAE because central bank over here doesn't allow crypto exchanges. But there are a lot of crypto exchanges which exist. But even the best of them, they have said that sometimes the withdrawals are uneven. Best way to do is that if you're holding a Bitcoin right now in the derivatives platform, you can take a short selling position also. In case if the price goes down, you will be making money for by short selling a derivative. So that is something which we can discuss further one-on-one if you would like to. So that's why a lot of people are using derivative platforms, because if you want to speculate, then rather than the derivative based platforms, normally how the withdrawals happen into one's bank account, for which a bank statement is needed, and there are no third party transfers. So the trading accounts or the demat accounts are not that easily hacked. I'm sure some of you will have demat accounts in India. How easy it is to hack it? It's very difficult because the money cannot be transferred to a third party, right? So a lot of people use derivative based platforms to make sure that they are away from the e-wallets. Okay, what could be the ideal time to hold any crypto? If you're talking about the duration, right now, looking at the 50% decline, I think something like Cardano is one of the important cryptos which people may or may not be looking at, because I'll tell you the reason behind it. Cardano is building a platform to accommodate usage in the education, retail, finance, and healthcare sectors. And it has recently, the company which is behind building the blockchain for this particular crypto, uh, it was picked to revamp the country of Ethiopia's educational system. Now, this can form the backbone of a system to verify grades, monitor school performance, boost education for 5 million students and teachers also. So this is something which Cardano, and there was one of this reason that why Cardano went up to 1.80, and mining of Cardano is much more environment friendly than Bitcoin. So you can start looking at Cardano if you are looking at a crypto, and it's a $1.6. So you can check your risk and try to look into it. Again, guys, it's not a recommendation. You talk to me before you do anything. Talk to your consultant and look at your risk. But look at Cardano. This is available in our platform also, but you will find it any crypto exchange as well. Question for a normal man: how he know when to exit or sell, or tips when to exit? So that's where you need a consultant, because Bitcoin or any crypto, it is more of a technical perspective. You look at a chart, like let me show you right here. Look at this. See, this is your trading account, and right here, this is a chart of Bitcoin. So normally what I will do is, again, please look at this. Normally what I will do is, my entry price of Bitcoin should be somewhat here, and my exit should be somewhat here. Why it is? Because of the technical analysis feature. It comes here, it goes down. Again comes here, goes down. Again comes here, goes down. Again comes here, goes down. Tries to break it, it doesn't break. Again comes down. Again reaches here, comes down. Again reaches here, comes down. At the same time, if you see, it comes here, it goes up. Comes here again at this level, goes up. Again it comes here, it goes up. So Bitcoin is running on a very technical. So again, there can be multiple supports and resistance. A consultant can really help you with this. Look at this. There can be multiple supports and resistance. This can be a very ideal support right here. And again, look at this. This can be ideal. It depends on what is the duration of your. It can be for days, can be for hours, can be for years. So we can help you out with that. Okay, what could you be? Again, a lot of questions here. Where is it? Okay, this is done. What are the, is the blockchain used for? Okay, 1 second. What controls the inventor has over the crypto once the crypto is out for trading? Control the inventor has got over the cryptos once. Uh, what control does the inventor has over the cryptos? There is not, because it is decentralized system. It's based on blockchain, so it is just the number of supply. Right now, the supply of Bitcoin is limited, and that is what it increases the value. But it was not created or invented for the same purpose. There is no control over it. There's not one person who's controlling it. It's a decentralized system, so that is the one of the reasons. Okay. Do you think developing countries, especially like India, would adopt cryptos going forward? Can it benefit from the economy as such? Again, cryptos may be far, but blockchain, absolutely. I think blockchain is something which will be used in different sectors, whether it is energy, finance. That's why I keep focusing on investments in blockchain and those companies which are investing in blockchain. And you will find ample of, trust me, you will find a lot of companies. Even we have a lot of companies which are there. So that is something there. But again, as I said, crypto is, recently there was a news in India that it is banned. Then again, the news came that it is not completely banned. It only depends on time, right? So there are different views. Somebody asked me my views on VeChain. Again, it's a crypto token. So I think, so I'll tell you something about VeChain. Again, it's a crypto token. It's just on the top of my mind. I would still do a lot of research before telling you. VeChain is also normally a public blockchain network. Anyone can read, write, deploy using the VeChain technology, provided with the opportunity to develop the smart contracts using the blockchain. It can. Again, so when we see, in a way, like what VeChain is doing, it is using the proof of authority to achieve consensus between the nodes. Now, there is a concept of forks. When a lot of forks are created, it kind of discontinues the mining. So use the VeChain blockchain is actually can avoid the forks creation. So that is, again, I can actually explain you more about forks and Bitcoin mining in different sessions, because that is not directly related to the investment bit. But yeah, I mean, the blockchain technology of VeChain is a bit different from the usual cryptos what we see. What would you advise to buy in exchanges in UAE or in India? In terms of cryptos, or if you can clarify this. Meanwhile, the question: do you think developing countries, especially, okay, I did this. If the price goes minus, Dogecoin and oh yeah, if price cannot go minus, or it can go zero definitely, because it doesn't have an intrinsic value. I mean, who knows if it goes minus, because it doesn't have a intrinsic value. There is, like today, I know that like the value of gold, when we see it has an intrinsic value, it has a lot of sentiment attached to it. So it is difficult for us to understand it can go to zero, but cryptos doesn't have that. So yes, it can go to zero. It can. Okay. Let me just keep checking more and more questions. There are no great questions here. What? Okay. Perfect. How to use the derivatives account? Okay, so what I'll do is, first of all, through an email right now, whatever I discussed, it will come to you. That all the portfolios which I've discussed, it will reach to you on email along with a demo account by your relationship manager. I will be available for a one-on-one session directly to all of you. You can pick your date, pick your time, and we can discuss a lot more about how to invest into cryptos or ETFs or blockchain-based instruments using these derivatives, how to do it in a safer way, and how this can be a part of your portfolio in a understanding the risk. Again, as I said, how it can be a part of your portfolio, it can. So if you see this particular example, there are a lot of all crypto index. Look at this. This is all crypto index, emerging crypto index, which allows you to take a diversified exposure in different currencies and not just one. Major crypto index. Again, so it helps you to take exposure in different cryptos and not just one. So you can take exposure through which you will not find on Coinbases and Krakens. This is only a derivative product. So crypto indices, crypto ETFs, stocks, this is something which you can use using derivatives and you can invest into. This is a different way and a easier way. And again, a much more systematic way to do it. So definitely, please talk to your relationship managers who have spoken to you, who have called you, and definitely we'll send it to your emails if you have registered your emails with this. If you don't receive it, my email is yogesh@century.ae, yogesh@century.ae. Send me your email asking for the portfolio in case if you don't receive it automatically, and I'll definitely get back to you. I'll be available for one-on-one sessions. And thank you so much. I know you will be having a lot of questions about mining, but that's a completely different subject. We can talk one-on-one about this. Today's session was part one, talking about what cryptos are, stable coins, altcoins, mining, what has happened in the past, what is expected in the future, how blockchain works, which are the companies using blockchain, how you can invest into it. We're going to have another session. We are going to talk about only cryptos, not about blockchain, just specific cryptos and their price movement, which will be more of a trading and speculative point. But if you want to talk more about mining, we can have one-on-one sessions and we can talk about mining as well. It does not directly contribute to the investments bit, so it's not the center of the session, but definitely if you want more information, we'll definitely help you out. Once again, before all of you leave, on behalf of my team, my family here at Century Financial, a big vote of thanks to all of you and anyone who is involved into healthcare or medical department, who's working day in, day out, risking their lives out to treat patients of COVID. I really hope that everybody is safe out there. And I could not thank enough for all those for going out and saving millions and millions of lives and putting their life at risk for us. So please pass my regards. If you are one of those, then thank you from the bottom of my heart. I really hope to see all of you sometime next. I'm available for one-on-one sessions in the office with proper safety protocols, which we are measuring. So let's try to invest in a much more safer way, in a much more risk-managed way, and a much more informative way. My name is Yogesh. Once again, you have been a great audience. If you have any more questions, do send me emails, talk to me, and I'll definitely answer your questions. Thank you. You have a great night.